The economy is weak. It looks like it needs a boost. Perhaps a little QE injection would help out. The only statistic that has been looking positive, the stock market, has been volatile recently, and fund managers have been worried about their portfolios and have adjusted and realigned to a more cautious approach. But does the real economy follow what we see on Wall Street? Or is it the other way around? You came here for the truth, so let me unveil that for you. Today we're going to look at the US economy. I have several charts to show you today. This is the chart GPS. Let's begin. You are looking at the growth rate, compound annual growth rate. Looking at this every time there is a bull market, it seems to be worse time and time again. You can see that the growth rate has been slowing down, and it's at a considerable slowdown when you look at 3.5% back in 81 to 90, then in 1990 to 2001, 3.3% down to 2.4%, and from 2007 to 2016, you're looking at 1.2% growth rate. If there is a recession and then we make our way out of it, what will the growth rate look like this time? Essentially, nowhere to be found. These are the real statistics. It's from Contra Corner, and I think that this is something that people just don't realize, that even though interest rates are all the way rock bottom, all right, you have money printing skyrocketing. You still can't get that growth rate that we had back in 2000s, back in the 90s, back in the 80s. It's not happening now. Despite all of that intervention, still not happening. Next, personal savings rate. People don't save money. Okay, I'll show you in a moment another chart which corresponds. People aren't able to save any money because they have to spend too much on other things. They're spending so much money on healthcare. They're spending so much money on other things, even perhaps some people on things they really don't need, but ultimately they're spending a lot of money. Look at this. In total, the personal savings, if you look at it in dollar terms, you will see this declining year over year. When we see what happened during the financial crisis, people started increasing their savings simply because they were worried. They didn't know what was going to happen. They were feeling this level of uncertainty, so they increased their savings. And that was very, very short-lived. Now today we see that same trend. Credit card usage, student loans, mortgages, etc. And then on top of that, personal savings down further and further. Real median household income in the United States. I'll connect this in with another chart as well. You need to understand that everything that's going on today, since the 90s until today, we are looking at basically the same levels. People have not been able to earn any more money over the past 3 decades. And that's an ominous sign for the future. While everything has been getting more and more expensive, I know where I live in Toronto, real estate prices have risen, electricity prices, food prices, things that you would go to buy at the store has increased. Dollar stores are not dollar stores anymore. They carry items that are $3, $4, $5 now. You see everything inflating, but you see the real median household income staying steady. And as far as I'm concerned, I've seen statistics showing that it's declining, but we'll take this for what it is. I'll speak more to this in just a moment. Average hourly earnings of production and non-supervisory employees, okay, basically we're looking at the average person versus inflation or fake inflation with the CPI. So while we have this small amount 2.8% of average hourly earnings over the last year. Great. But look at what happened with inflation. It's the same level. And that's CPI, not even real inflation. So if we're both increasing at 2.8%, they effectively cancel each other out. That's what's going on here. Now, if we were to actually look at the real levels of inflation, there's many different statistics. You can look at shadow stats, for example, which shows you a very high number. But let's just have a little fun with this, okay? Maybe inflation is 5%. Let's be ultra conservative and say it's 5%. It's probably more likely towards 7-8%. I don't know what increases at 5%. Everything that I've had to buy over the last year, it's been more than 5%. Food, definitely. Energy, yes, absolutely. Just everything. You go to see a movie or something, that's probably, it's been a while, but that's probably significantly more expensive than it was a few years ago. The price seems to jump dramatically. But let's just be conservative and we'll say 5%, okay? That's eating away entirely at the average individual's earnings, because it's not increasing at the rate that our inflation is. But of course, that is the purpose and that is the point of creating inflation. People wonder, where's this inflation coming from? Oh, it just happens. If you hear the common individual talking about this, maybe they don't know anything about financial matters. Well, as time goes on, things become more expensive. Like as if that's the way it's always been. But we're never going to change their minds. And that's okay. What you need to do is you need to understand how the system works, understand the cycles, and then understand how to protect yourself. That's the key. Advance real retail and food services sales. Look at this here. You can see, I wish that this chart went back further, but at least since 2011, you can see that this has declined, averaging, maybe 2.5% here change from a year ago. This seems to be something that we are encountering. And I think a lot of this has to do with the fact that people are severely indebted. They don't have money to spend anymore. Although they're not necessarily saving what they used to, at the same time, they don't have any money. They're buying everything on credit and they simply can't make ends meet. I've seen the statistics before, showed you here on the channel, that individuals who literally are unable to make ends meet at the end of the month, every month, they are still above the poverty line. So these calculations are off and they do not represent the real people. I've talked to so many people, not just in the US, but around the world, who are in a state where they're unable to make ends meet. They're telling me what they're dealing with, and it is truly unfortunate. Because these central bankers have created a system that makes this happen. They give loopholes to the big corporations that you and I could literally never get. All sectors, debt, securities, and loans, and the GDP. Ultimately, what you're seeing is that debt of any kind has been increasing dramatically, whether it is debt for investments or it is debt that people are incurring. The only time that we saw any, I don't even want to call it deleveraging, but you see this little dip that occurred during the so-called Great Recession. It didn't last long. But look at the GDP and look at the difference in between these two. Price to sales ratio, something else that has gone completely out of whack, surpassing what was seen during this time frame of the financial crisis, and has skyrocketed upwards. I'm forgetting how this was. I've shown you before, previous during the dot-com boom. I think it's actually surpassed what was experienced during the dot-com boom. If not, we're at about the same level anyway. This is just one more statistic, one more indicator showing us that we are going into absurd territory. Looking at this, an inverted US yield curve has preceded ISM index dropping below 50, economic contraction, 7 out of 7 times since 1977 with a 12-month lag. 7 out of 7. I would say that's pretty certain. And in this case here, we are seeing the trend. It's heading downward. You know, if this is 2019, I don't know if it's the line, maybe that's 2018, hard to tell. But somewhere around this 2019 time frame, less than 1 year away, this is going to go into this negative territory, and we may have history repeating. Would this be the only time out of the last 8 times that it didn't occur? It's possible. It really is possible. I don't know what's going to happen, but there are so many indicators now that are just pouring in. You've seen it before. I've shown you on the channel talking about, okay, the last 3 times this happened, stocks crashed. The last 2 times this happened, stocks crashed. The last 8 times this happened, stocks crashed. And it's just all adding up. I don't know that it's going to happen. I'm just showing you this is what happened every single time before, and it looks a little suspicious. So we'll see. That's all for this video. If you found it informative, please give me a thumbs up. When you give me a thumbs up, it helps to support this channel, so I do appreciate that very much. And last but not least, if you found this video informative, I know you'll find my books, The Money GPS and my newer release, Global Economic Collapse, even more informative. The first book is about the 4 asset classes and how to profit from them. And the second book gets into familiar topics, but I also talk about earning income, reducing your monthly expenses, and so much more. You can actually flip through these books for yourself. All you have to do is go over to Amazon. There are links in the description of this video. That's all. Take care.